Hello traders and welcome to another video review. Today is Thursday, August 21st, 2025. Let's take a look at the economic calendar for today. New Zealand data were published during the Asian session. Trade balance down to minus 578 million, generally a little bit improved in the yearly measure. Japanese bank services PMI down from 53.6 to 52.7. We are still waiting for the rest of the manufacturing data from the Eurozone. France, Germany will publish the PMI data within the next hour. At 10 o'clock, we got the manufacturing composite and services PMI from the Eurozone and the global composite and manufacturing and services PMI data from the UK, as scheduled for this 30 minutes later at 10:30. We got some data from the US during the US session, and this looks busy session for me. Philadelphia Fed Manufacturing Index starts at 2:30 together with Philly Fed employment. In Canada, at the same time, we got LMPI data scheduled for release. Initial jobless claims are scheduled for release at 2:30. Then we got the data from the US again. Quarter to 4, we got the manufacturing component and services PMI data scheduled for release, and at 4 o'clock we had existing home sales. At the end of the day, at 10:30, Fed's balance sheet is scheduled for release. So PMI day all across the board. We start with Japan, then the Eurozone, and then the US will publish the PMI data. So without any further ado, let's switch to the charts. We start with euro dollar. So the euro dollar 4-hour time frame chart has been rejected from the breakout of the above the possible breakout above the trend line. 1.1674 was the high, and then as you can see the market keeps moving lower. Yesterday's low is located at the 1.1623. Any breakout lower would put this level here, 100 periods moving average at 1.1613 up for a test. Then we have the technical support at 1.1592, and then eventually we go even lower, 1.1558, 1.1545 is the next, eventually the next level. So the outlook is sideways. Nevertheless, the bears has a little bit of an adventure and the control of the market, because the RSI shows us the momentum is at the level of 41 points, which means that the market is being treated as the playground for the bears for now. US dollar versus the Japanese yen keeps trading below the trend line, below 100 periods moving average, below the key resistance levels, and it's getting slowly but surely towards this level indicated by our scenario, 146.23. The momentum was quite negative. Now it bounced back up towards the level of 50. Nevertheless, it's still something unusual a little bit, because the bulls have obviously bounced the price a little bit higher, but not towards the 100 periods moving average, not towards the technical resistance at 148.05, but just a little bit here at 147.54. So it looks like the market might be moving lower anyway, despite this recent affection. Trade is still sideways. We are still trading a little bit in a tight range. A little bit of a breakout is being tried by the bulls, but so far no avail. Every time we try to break higher, the market is being pushed lower back onto the range. British pound is waiting for the PMI data, and as it waits for this data, in the meantime, bears broke below 1.3475, now resistance, and 1.3462 now resistance as well. So we got the situation when the market is clearly under the bearish control. Momentum is very weak, 35 points, and we are getting towards the 100 periods moving average at 1.3411, or even lower, towards 1.3385 or 1.3370. This is the next important technical support. The market keeps trading below this short-term trend line, below the technical resistance levels, below the wave B high, and it looks like the market is moving lower to complete the corrective cycle, because this big spike to the upside looks very impulsive to me, and when the correction is completed, the market should continue or resume this movement to the upside. So that was the British pound. Let's take a look at the data from the this is the New Zealand. Let me just okay, New Zealand was done yesterday. Gold market. Gold doesn't do much. It tested the 100 periods moving average on a 4-hour time frame chart, 3,347, bearish engulfing pattern, rejection back into the level of 50. So again, we got the spikes above the level of 50 and pullback. Spike above the level of 50, pullback. Spike above the level of 50, pullback. So this time is no different. We got the situation when now the range is a little bit bigger. 3,310 for the support, 3,375 for the resistance. Nevertheless, we can place some other lines here. For the resistance, immediate one is 3,358 and the local swing high at 3,352. Generally, the market keeps moving lower. We retraced more than 50 or even 61% of this swing up. So the market keeps, as you can see here, if we zoom out, keeps moving sideways basically, right? This is the sideways trend we got on our gold chart. So basically a little bit of a pause on the gold rally, a little bit of the movement, sideways movement, not too much, not too less. We still maintain the major range, 3,450 and 3,250. So it's like a $200 range when the market moves up and down with no major breakout just yet. Bitcoin is still under the pressure. It tested the technical support at 112,622 yet again. Another long down shadow means that the dips are being bought because the market is extremely oversold. Nevertheless, even the nearest technical resistance breakout was too much for the bulls, as the bulls were rejected from this level 114,706. So that's the intraday technical resistance, and even if the bulls will break above this level, there is still major technical resistance, 117,000 basically, and 100 periods moving average just above it, and the trend line resistance just above it. So pretty much some kind of a trap for the bulls right now on a short-term chart of a Bitcoin. It looks like the downside is looming for the bulls. There are still the lows from the August 3rd, 2025, which is still up for a test. So maybe sooner or later we will get this level tested, possibly quite strongly, because it looks like the bears are still in charge of this market. The same situation might be spotted on the Ethereum. Right, Ethereum just retraced exactly 50% of this swing up. So we are moving inside of this corrective channel, parallel channel. We go from lower channel line to the upper channel line, just as we did yesterday. So far 50% has been retraced, technical support has been hit, and pretty nice major movement to the upside has happened. Nevertheless, it's still not enough for the bulls, because as you can see, this level here, 4,375, is the major technical resistance, and in order to move higher, even to test the 4,789 swing high, we need to break above this level first. For now, we just move from the level of 32 points, basically almost from the extremely oversold conditions back towards the 52 points on the RSI, which means that the market is neutral right now. So it's neutral because in order to be positive, in order for the bulls to have a control over the market, they need to break above the technical resistance, break out of the channel, fly higher strongly, independently, aggressively towards the last swing high. If there is a reversal in the momentum, that means the market might go lower, break the 50% of the Fibonacci retracement, and hit the 61% of the Fibonacci retracement, which is located at $3,900. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.